Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. All the reasons to be happy, right? Record high level scale by the market, and in today's session nothing is going to change. At least on the face of it, it looks like Indian equity set to clinch in more gains after scaling in those record high level in the previous session of trade, while Nifty is set for best monthly expiry in nearly 3 odd years. Well, talk about Bank Nifty. The gains have been greater than Nifty for the first time in at least 6 months. Talk about Gift Nifty indicating another 80 points build up as compared to what we saw in the previous close, right? It was a record setting move on Wednesday. US indices, however, also neared a record high, longest weekly win since 2017. Asian shares have been at a 5 months high as rate bets pile up. Talk about FIIs, they've been the net buyers for the first time ever in the last 7 consecutive sessions, buying shares to an extent of 2,926 odd crore. DIIs have turned in net sellers after 6 days of consistent buying. However, they have offloaded minuscule amount to an extent of 192 odd crore. Well, talk about what's really going on with the market now. One may ask, what's the reason behind the rally? 5 big triggers for Indian equity markets: visibility in political stability, expectation of soft landing, no recession scenario in US, expectation of rate cut in India and US in 2024, expectation of strong earning growth in FY25 is also working in the favor of the entire market. And also do bear in mind the fact that Nifty is still not very expensive given the emerging market basket scenario that we're looking at. So these are essentially the 5 reasons why markets are at the place where they are. Whether there is more steam, we'll figure that out in just a bit. FNOQs, well, FIIs have been the net sellers in the index futures. They've been buying index option. Look at the amount, 19,812 crore. They've also been the buyers in stock futures, also been the buyers in Bank Nifty futures. But what remains to be noted is they've been the net sellers in Bank Nifty options. On one side, you have the data where the amount is really big when it comes to Nifty, and Bank Nifty options is where FIIs have been selling. I'll talk about FNO ban. What still remains in the ban or still is in the ban is RBL Bank and National Aluminium Company, NALCO. Out of the ban is that sugar stock, Balrampur Chini, Delta Corp, Hindustan Copper. Talk about option queues. Nifty PCR seems to be a bit in the overheated territory, 1.42 versus 1.23. But let's get going with the strategies, level and top recommendations of the day with Chandan Taparia, the Senior Vice President, Heads Derivative and Technical Research at Motilal Oswal. Morning there, Chandan.
Good morning. Thanks for having me. Bulls are roaring.
Bulls are roaring, but do you see some concerns with the India Wix now being at that substantial level, because it perhaps Nifty PCR ratio also indicates a bit of overheated territory? What's your recommendation there?
So Nifty put call ratio at 1.43 and today's monthly expiry. So I believe that after the monthly expiry, the PCR will again set a lower level. PCR is at 1.43 because market witnessed a dip and then again sustained put writing took the market to higher levels. So there is no worry with higher put call ratio. And nowadays the put call ratio cycle remains for 1 week because we have weekly expiry every week. Okay, now talking about India VIX, which is beyond 15. VIX is at highest level of last almost 39 weeks. Usually we believe that market and volatility has negative correlation 85-87% time. But this time we are at new highs where call writers are trapped and they are getting force and pressure to unwind their call positions. And that is the reason that VIX is increasing up. So if you look at the IV is combination of call IV and put IV. And this time we are witnessing sharp shares in call IV. And that is the reason that why net to net India VIX is at higher levels. I'll just take one example. When we are at range bound market or we are at vegetable market, we need to be with lower speed. But when we are at highway or new high, even if the speed is high, no need to worry because then we can reach our destination even at much higher zone. or even at much earlier level. So I believe we are at new high and VIX is high. So that will even accelerate the momentum. And that is the reason that VIX at 15.5 and we are not worried because put call ratio is moving up. Base of the market is shifting higher. And that is the reason that we are expecting 22 to 22 and way beyond 21,800 zone in the Nifty index soon.
21,700 mark, about that level is what the opening is of the market right now. Well, a bit of record high levels there, needs to be perhaps a bit of reconciliation there, but 0.3% of gains clocked in by Nifty 50 in early deals. Indeed, it is a good start at record high levels, 21,725. That's the level that we're looking at right now for the market. Bank Nifty, let's see if there is some degree of outperformance coming in for that one. Well, almost reciprocal to what Nifty is typically doing. 0.3% of gains clocked in for that one as well. Let's talk about the mid cap and the small cap index before we switch on to our conversation with Chandan and ask him if this is the market we could even think of shorting. But looks like the trend right now is just in that northwards direction. Mid cap and small cap too faring well. PSU banks and HDFC Bank is what we'd like to see separately before we kind of go ahead and check the top gainers and the top losers. PSU Bank too participating into this rally in a big way. Almost 1% of gains clocked in from PSU Bank. HDFC Bank, which has just started performing into this market rally, needs to be seen now if this heavyweight actually can dance in the way that we are expecting. HDFC Bank also is doing well in early deals, perhaps clocked in 12% gains in this month itself. Top gainers and the top losers that we have. Well, look at the list. NTPC, JSW Steel and BPCL. These are some of the top gainers. Tata Steel, Bajaj Finance and ICICI Bank. Well, it's a bunch of financials along with some metal names which are apparently doing well. NTPC is an interesting one. We'll talk about that in just a bit. Top losers. Let's also look at that if we have a list which is there or it just is an optimism across the board. Well, you have it there. Ultratech Cement, which saw that phenomenal gains coming in the previous session of trade. Apart from that, also if you could look at Maruti Suzuki Britannia and Axis Bank. Well, these are some of the other top losers that we have. So right now it is something that we need to watch out. Infosys was also one of the top losers apart from what we have in terms of Ultratech Cement. Chandan, coming back to you, it is a good start. Of course, it's built on to the record high level, so it is fresh record high. What is the kind of advice that you're giving to your viewers? Not short this kind of market, or would you prefer more of Bank Nifty over Nifty? What's your strategy now when the markets are at record high levels?
Yeah, so first thing that be with the trend, that is the first advice. Second, look at your position sizing and risk management part. The Nifty index is continuously making higher lows until immediate low is not broken. No need to worry. So as of now, 21,500 is my key support. Till it holds above the same, you can look whatever you want to look at higher side, whether 21,800 or 22,000 or 22,222. So in rising market, don't look at the resistance, look at the support. That is the first advice. Be with the trend. Trend is your friend. That is the second advice. Third advice is position sizing and the risk management. Okay, now looking at the technical and recommendation point of view, I'll be more bullish on Bank Nifty compared to Nifty because in this month, your Nifty has rallied by around 7.5%, but Bank Nifty is up by 8.5%. Some outperformance and momentum clearly visible in Bank Nifty index. So I believe that this momentum could continue till it holds above 48,000. We can attempt towards 48,888 to 49,000 in the Bank Nifty index.
Well, point well taken. And also those three advices to the viewers. Don't look at resistance levels, rather look at support. Trend is your friend and size your positions according to the risk management. But Chandan, HDFC Bank, that's the one that I really want to talk about, apart from a bunch of other names. It's done exceptionally well in the last 1 month. Do you think there is more steam to the rally, or you think perhaps it's rallied enough, at least on the charts?
Elephant can't dance, but elephant can run. And I think there is a reason why Bank Nifty started moving upwards. Still, HDFC Bank has scope. Earlier, it was finding hurdle at 1700 on multiple times, and we have noticed call writing activity at 1700. Now we are heading towards the end of expiry, and fresh call writing in the next series is inching to the higher zone. that is giving some scope. If I look at the price behavior in 2021, SDFC Bank made high near to 1725. In the 2022, high was 1722, and this time it made high of 1757, then corrected, and now we are back to those levels. So I believe a small 10-15 rupees move can open the further 50 to 100 points rally in SDFC Bank, and that can add move of 300 points, 400 points in Nifty, and 500, 800 points in Bank Nifty. So SDFC Bank looks good, and that is the reason that why we are sounding quite bullish in the indices as well.
Bit of punter's bet there, but nevertheless, I'd want to chat about that. Sugar stocks, Balrampur Chini out of the ban. What do you make out of it? And also your recommendation on NTPC, which is the top gainer today.
So yeah, when you talk about sugar and we have year-end and the festive vibe, so we should say yes, but the problem is trend is not positive. Most of the sugar stock have witnessed selling pressure, especially when I talk about Balrampur Chini. This stock is down by 16% in this series, and we have witnessed built up of short position. So if you want me to avoid, then I can avoid also. If you are looking for bounce, then look for 400 to 404. So I think better to avoid and look at the sector which are really outperforming and witnessing momentum in the market.
Top recommendation from you, Chandan. Today is when we've scaled the record, fresher highs coming in for the markets. One top recommendation where the risk reward looks appealing.
Yeah, so I look at Apollo Hospital as a first trade. Consolidation breakout is clearly visible. One can buy with support of 5650. Look for a target towards 5900 plus. I can look at second trade as a Bank of Baroda. A consolidation breakout with support of 229. We can look at target of 242. So Apollo Hospital and Bank of Baroda or PSU banks could be my preferred pick for the day or for next 2 days.
All right, Chandan, now we are going to leave it at that. And thank you so much for taking out the time and having this conversation with us. All right, we need to talk about 3 stocks before we move on to the conversation with our fundamental guest. Stocks and news, essentially, Azad Engineering is one that I'd like to chat about. It's got to be a newly listed company. Of course, it's got to be listing in today. It's a Sachin Tendulkar-backed firm. It's got good subscription levels. You saw good interest coming in for this one. The company is going to be listing in today, and the final issue price has been fixed at 524 per share. So do keep an eye out on this one. And listing gain is expected to be around that 33% kind of a level, at least on the upper band. So that's something that we'll be keeping a close eye out on. Punjab National Bank, well, the board is going to be meeting in today for the fundraising plan. It intends to raise funds through the approved mode or a blend of options in the upcoming financial year. Now, do bear in mind the fact that the country's second largest public sector bank has approved to raise an overall 12,000 crore in 2023 to 24. By September of the current fiscal, it already raised in 6,900 crore. Keep an eye out on this one as well. Also, Canara Bank, an interesting development there. PSU lender has gotten an approval to initiate the process of listing its mutual fund subsidiary, Canara Robeco Asset Management Company, which is expected to come up with an IPO. That's clearly an interesting one, and look at the gains coming in for that one. 3.5% clocked in for that particular counter as well. But enough and more ground needs to be covered in terms of the fundamental side of the story, especially given that now bulls are raging out there. We're sitting at record high levels day after day. FII activity remains buoyant, but is there a cause of worry? Let's go across to Shrikant, Chouhan, the head of equity research, Kotak Securities. Good morning there.
Good morning. Yes.
Shrikant, I'm going to start off by asking, you've joined at a time when, of course, we're having this conversation now when the market is at record high levels, of course. And FII activity also has been very supportive. At least for the last 2 months, we've seen immense amount of buying coming in from the FIIs too. What is that one typical worry right now, niggling worry for the markets you perhaps think that the market is overlooking?
Well, for markets, the important part is that it is going up without any meaningful correction, and it is giving thumbs up, I can say, to almost all the events which are turning positive for the economy as well as for the Indian equities. But the overall scenario of the market is clearly indicating us that we are entering into those particular levels where the valuations are expensive. So only the worrisome part for the market is that if something comes negative, and if that is like very, I can say minor in terms of its overall implication, then also it can impact a lot. That's the overall view that we are keeping on the market, because if we see the markets, then it is not correcting. Until the markets are not correcting, nobody is going to take the profit at in this particular rising markets. So that's the reason we are like little bit careful, and we are of the view that we should be more and more stock specific in this market instead of taking broader view on the market.
Sure, that's the word. Of course, what do you make out currently? Which are the themes which typically sit well with you in the current scheme of events?
See, like some few weeks back or few months back, we were consistently giving more weightage for investing in large cap and mega cap companies. But there also we saw solid run up in last 2 weeks, especially post state election numbers. Now we are of the view that we should be more and more stock specific, but in that also we are of the view that the real estate space as well as metals and mining space should do well in this particular market. BFSI is already doing well, and I think this particular space is going to do well for next maybe couple of quarters. That's the overall view, because most of these banks are still far away from their fair values, almost 10 to 15% away from their fair values, which is a very strong case for investors to invest in. PSU banks as well as private banks, both the banks are available at decent levels. So BFSI is definitely going to remain a very strong candidate to say like preferred way to invest for. But after that, I think we should focus more on the metals as well as real estate space.
Okay, metals and real estate is what you're looking at. But within metal basket, what do you like? Is this more of Nalco or a JSW Steel, Tara Steel? Which are the counters technically which look attractive?
See, like in this particular space, we need to give more weightage to ferrous companies, which are like in steel and iron ore. Over, I'm going to say, instead of giving more weightage to non-ferrous companies, give more weightage to the ferrous companies. The reason is because here the import parity levels, I'm going to say the current metal prices are very close to the import parity levels. Domestic prices are falling. There is a fall of nearly 7 to 8% from the highs, but export prices are increasing. And that's the reason we are like now very close to the import parity levels. And if whenever there is such type of scenario, we see good amount of activity in metal companies, especially in steel companies. In that specifically, we like Tata Steel as well as Jindal Steel and Power. Other stocks like Steel Authority as well as JSW Steel, they are also attractive, but currently they are far away from their fair values. But these two stocks are still available at decent levels. From here, the next level could be around 800 for Jindal Steel and Power. And for Tata Steel, it is like 140, but eventually we are expecting stock to move upward based on the upcoming numbers.
Okay, essentially I wanted to shift the focus from metal and real estate space. Of course, those are the themes that you suggested. But something in the like of financials, essentially. They've been doing well, and they have done, at least PSU banks have done well for the entire year. In this month, we've seen HDFC Bank outperforming. But if you just look at the stats, it's also State Bank of India, which is the top gainer on the Bank Nifty index. Do you still think PSU banks are an attractive bet as compared to that of private banks like HDFC Bank?
Yeah, see, like in the current environment, if we see the overall fundamental performance of this particular banks, then public banks have still like a lot of headroom for passing through the interest rates as compared to private banks. And that's the reason we may see a very gradual decline in NIM, not like drastic decline, or maybe the decline which we are seeing in private banks. So that's the reason we are seeing a lot of activity in PSU banks. Also, if we go through with the overall performance of these banks, then because of the heavy investments in private banks, and when there was like uncertainty in the market, now the investments are coming into public banks or PSU banks. Also, post-elections, now the certainty, the confidence level of investor is now increasing, and they are looking the market beyond 2024. And if that's the case, then they are buying. They are going to buy those companies which are cheap in terms of their current valuations. So if we go through with HDFC Bank, then it is at 2.5 to 3 times to the book value. But State Bank is still available at 1.5 to 1.75, or Canara Bank or Bank of Baroda at 1 to the book value. So while looking at their valuations, I think more funds or more investments will come for PSU banks, and that's the reason we should be like buyer in PSU banks along with private banks.
Which is the sector that you think perhaps is a little more overheated? Could you, perhaps it could be the one that has seen good amount of performance. Realty index is also one of the top sectoral bet, or let's just say index for the entire year. You're pretty bullish on that. But one particular theme that looks overheated right now.
See, for if we just go through with the overall performance of the market, and in that, if we consider the sectors where we are seeing a lot of activity or maybe overrating sort of activity, then we can say that all these PSU stocks, public sector enterprises, they are trading with very rich valuations or expensive valuations. So there we need to be more and more stock specific rather than more on the sector specific side. Also, if we go through with other indices, then in that, yes, capital goods and infra stocks are also trading with very high valuations. So there also we can see some pause sort of activity. But broadly, we are of the view that the way there is a performance of the economy and consistently the events which are turning positive for the Indian economy, I think we are not going to see major correction. But yes, time-based correction is more likely in the near term.
Okay. Apart from that, we've scaled in FIIs is what I'd want to chat about. We've seen good amount of buying coming in. Of course, there was a bit of sell-off in the last 6 trading sessions, but the amount was pretty minuscule. In today's session, we've seen the comeback. The last 2 months have been pretty decent for FIIs. If they were supposed to come back in a big way for 2024, which sectors do you think or stocks that you think will make the most of this comeback?
See, for FIs, what is important is the overall outlook on the currency. And if they see that our currency is not going to depreciate further, or if their dollar is going to weaken further, which is the case right now, then they are going to come for the emerging markets. In that, we need performance from other markets also. We need performance from China. We need performance from other Asian markets. If that happens, then we can see huge inflows for equities. But apart from that, if we just consider the case of India, then I think if the funds come, then definitely they will again chase to BFSI very first, because it is the sector which actually dominates to the Nifty, Sensex, as well as to the economy. So private banks, PSU banks, they are going to do well. That's the overall view. So I think the funds are going to come for BFSI. But after that, we are expecting funds to come for those particular sectors where the valuations are still cheap, and there is like scope that they can do well in next 12 to 18 months, not in the near term, but 12 to 18 months. And in that, we are expecting funds to come for cyclicals like maybe metals or commodities, maybe cement companies. So there we are expecting further more flows. In fact, infra companies, select infra companies, they can also do well, and few power companies.
All right, Shrikant, we're just going to leave it at that. Thank you so much for taking all the time and having this conversation with us.
My pleasure.
All right, that's all that we have in this edition. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.